Hello friends, this is Raman Gill with your weekly Forex market analysis for the week of March 13th to 17th, 2017. Just a quick disclaimer before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. If you have questions about your individual investing needs, I recommend you talk to your investment advisor. So first we'll take a look at the economic news to see what's going on this week, and then we'll go on to commitment of traders data, and finally we'll take a look at our charts to see where we need to be positioned. In terms of the news this week, we have a very busy week and a very important week. We start the week off with ECB President Draghi's speech. After last speech from ECB President Draghi here, we did see Euro jump up because they are talking about cutting down their asset purchase program, and some of the members had actually discussed a potential interest rate hike. However, that did not fly with the rest of the members. So at this point, they're not looking at any interest rate hikes. However, just cutting down on the asset or potential cutting down on the asset purchase programs was enough to push the euro up. So this here speech will be very important for the euro. And on Wednesday, we have average earnings index and Clement count numbers for the British pound. And then a very important piece of data that comes out for the US dollar here will be the federal funds rate. The Fed has been talking about raising the interest rates, and over the last few weeks, we have seen that pretty much every single member from the Fed that came out and spoke actually talked about interest rate hikes. So at this point, we are looking at a potential interest rate hike, and that will be one of the biggest news for the week. So we aren't just looking for the interest rate hike, we are also looking for direction from Fed as to what is going to happen next. What is the path that they're going to follow in terms of raising interest rate? They've talked about 3 interest rate hikes in 2017. The market will also be listening very closely as to how the Fed talks about the next interest rate hikes. If they talk about it in a positive way, if they give clear direction as to when that may happen, that will be positive for the US dollar. However, after the interest rate hike, if they do not give a clear path for the next interest rate hikes, we may see a sell-off in the US dollar. So watch out for that. And we also have GDP numbers out of the New Zealand, and we are looking at positive numbers here. We have employment data for Australian dollar, and then we have Bank of Japan policy rate as well as the monetary policy statement. Again, another central bank announcement, so this is very important here as well. And followed by Bank of Japan press conference. And then we move into another central bank, which is Swiss National Bank. We have the LIBOR rate and monetary policy assessment. So already we have 3 central banks here. And moving further on Thursday here, we have monetary policy summary and official bank rate from Bank of England here as well. So this week we have critical data coming out for central banks, so expect volatility this week. Further in, we have building permits, Philly Fed manufacturing index, and unemployment claims. And then we wrap the week off with manufacturing sales for Canadian dollar as well as preliminary UOM consumer sentiment number. So this week is full of central banks. Moving on to our commitment of traders data here, we are looking at Euro US dollar. We did see an increase in short positions for the euro. We have gone from 91,856 leverage positions to over 100,000 now, and that is a negative or bearish for euro. Moving on to pound US dollar here, we see that the short positions have increased. We have gone from 47,673 leverage money short positions to 60,356 short positions. So this is an increase in short positions, which means this is bearish for pound. Looking at dollar CAD here, we see that the leverage money long positions have actually decreased as well as the asset manager positions. We have gone from 27,168 long positions to now 17,382. This is the first decrease that we have seen in quite a few weeks here. So this is negative for Canadian dollar, which means this is bullish for US dollar CAD. Looking at Aussie US dollar here, we do see a leveling off in positions for leverage money. However, we do see that asset managers have actually started decreasing their long positions. They've gone from 14,784 long positions to 9,785 long positions, whereas the leverage money has stayed pretty much stable for this week. This means this is bearish for Aussie dollar. Looking at New Zealand US dollar here, we see a sharp decrease in long positions. We have gone from 32,632 leverage money long positions to just under 21,000 long positions. This is bearish for New Zealand US dollar. Moving on to our charts here, looking at Euro US dollar weekly chart, we see a very bullish candle for the week here. We did come to this 10500 level here, and price has since then bounced off of this level. Now we are looking at a potential further move to the upside here. The next target we are looking at is a 108.30 level over here. Looking at the daily chart, as we can see, we had a very bullish daily close for Euro US dollar. And the important level that we'd be paying attention to here would be 0700 or 720 area, 107.20 area. If the price breaks above this level, we are looking for price to move up higher into 108.30 level and potentially even higher into 108.60 level. Looking at the pound US dollar weekly chart here, the price has been bearish here. The weekly close was very bearish, and at this point we are looking at a potential further move to the downside. We could see a bit of a pullback and then a drop here. The next target here would be 120 level. Looking at the daily chart here, we did have a couple of weeks of sideways movement, and what that means is that we could likely see a move to the upside first before we see a drop. So in terms of the move to the upside, we're looking at this 12300 level and then a potential move to the downside, or even a pullback into this 122.50 level and then a drop. But our target here is 120 to the downside. Dollar CAD here has been very bullish for the last 2 weeks. However, we do see that the move has lost some of the momentum at this point. Based on the weekly chart, we are still bullish here. We are looking at 136.30 being the next level. Looking at the daily chart here, we did see the price pull back. So at this point, we could see the pullback come in deeper and potentially into this 133.70 level, and then a bounce to the upside, or potentially a pullback even deeper into 133.50 level here, and then a potential move to the upside. So with all these dollar crosses, one thing that we do need to bear in mind is the interest rate hike on Wednesday. And that will be the main news event, main driver for this week for all US dollar crosses. If the Fed raises interest rate going into the meeting, we may see a push up in the US dollar. And then if we do not see a clear path for interest rate hikes from the Fed, we are likely to see a sell-off in the US dollar. So keep that in mind. Looking at Aussie US dollar weekly chart here, we do see a bit of a neutral candle. We have pins on both sides with a small body here. Price did come down to this important support and level at 175.00 and since then has bounced off. So looking at the daily chart here, we did see quite a nice bullish candle here, and now we are seeing price move up. So at this point, we could see the price pull back all the way to 76.30 level or into this 7600 level, and then a potential move back into this 7500 level. Looking at New Zealand US dollar here, again, we have seen the price come to an important support and resistance level here at 68.90 level. And since then, we are seeing a little bit of a pullback here. Based on the weekly candle here, New Zealand US dollar is bearish. And here, looking at the daily candle, we are seeing the price move up a bit because we have come into this important support and resistance area here. So from here on, we could see a pullback here because price has dropped for quite a few days here. And in this case, the level we're watching is 69.90 level and potentially slightly higher into 70.50 area, and then another move to the downside potentially to come back and test the 68.90 level once again. So that's all for the weekly analysis. I do have a special announcement to make. I'm launching a new course called Demystifying Forex Fundamentals. One of the things that I've noticed is a lot of retail traders, we don't understand the fundamentals too well. I know most people look at the Forex Factory news. However, most people I find do not have a good understanding of what the news means and how the news drives the market. Over the years, I have picked up a lot of concepts through different courses I've taken and also through my MBA. So I feel like this is something that's missing in the market at this point. And to rectify that situation, I am launching the course called Demystifying Forex Fundamentals. And in this course, I will be going over not just the COT that I normally talk about in my weekly analysis, but I would also be talking about how to gauge market sentiment. I will be looking at how to understand the news reports that come out. What does CPI mean? What's GDP? And how does that impact the markets? How do the interest rate decisions impact the market? We'll also be looking at leading indicators and what these indicators are and how we can use them to make better trades. We'll look at intermarket correlations as well as currency correlations. We'll take a look at how to use equities to trade Forex as well as options data to take better trades in Forex. We'll take a look at US dollar index, as well as we'll take a look at different country profiles and also looking at what impacts their currencies. And we'll also take a look at carry trades. So the price for this course will be $397. The course starts on April 1st, 2017. However, I am doing a pre-launch right now. And if you would like to register for this course at this moment, the price is at $250, which it will go up in a week. For more information about the course, please visit tradingwithvenus.com/fundamentals. Have a great trading week, and I'll see you next time.